Ladies and gentlemen, Greg McCloskey from ForexLive.com. It's the Forex Quick Look. I'm going to take a look at the dollar versus the Swiss franc. Today's date is June 12, 2024. Of course, CPI came in weaker than expected, and that has the U.S. dollar moving lower. But for the dollar versus Swiss, we've run into some key support on the downside. We'll talk about it in this video, so let's get started. I'm going to focus on the hourly chart for this currency pair. And as you can see, the price has been trending to the downside until last Friday when we had the U.S. jobs report, and that sent the price sharply to the upside. In trading yesterday, the price extended briefly above the 38.2% retracement of that move to the downside. That level came in at 0.8986, and as you can see, the price moved briefly above that level to probably around 0.8991 before rotating back to the downside into the close. And trading here today, the price was trending more to the downside, and right before the CPI data, it was retesting the 200-hour moving average at 0.8954. Also, the 100-hour moving average was in play at 0.8950, and the 100-day moving average at 0.8946. So the market was testing to see, okay, which way are we going to run? Are we going to run more to the upside? We're going to run more to the downside. Well, of course, it was to the downside as CPI data came in much weaker than expected, and the market quickly moved all the way down to test the 200-day moving average at 0.8896. Also test the high of this swing area right through here, where we had a number of different swing lows going back into last week's trading. All these different levels through here found support buyers within the 0.8880 up to 0.88916 level, and indeed the price low came in around the 92 level and trading here today just below the 200-day moving average, just above the high of the swing area, and we've seen a rotation to the upside. So why do traders lean there? Well, because they could put a stop down here if the price were to go below the 0.8880 level, buying at 92, 93, 94. They're risking a relatively small amount down through here for a potential gain of something greater than that up through here. And indeed, the price has indeed moved up greater than the risk here at 0.8927. So overall, we have solid support down here, but we also are going to have solid resistance up here against this cluster of moving averages. So the battle is on between up there and down here, and we're currently trading in between those two levels with the bias more to the downside here. You can't ignore the fact that the price corrected about 38.2% retracement, sort of a plain vanilla correction, and we've resumed the price move to the downside through here. Plus the fundamental news of the CPI data is hard to ignore as well. Of course, we do have the FOMC rate decision later this afternoon, which could throw a monkey wrench into the whole system. We'll see what the Fed has to say with the CPI in the rearview mirror. 2 months now where the CPI has been tame. Fed was looking for multiple months to decide whether they would ease rates. So 2 out of 3. 1 more month to go. We'll see. My name is Greg McCloskey with a technical look at the dollar versus the Swiss franc. Good fortune with your trading. Bye-bye now.